The next section of our conference will deal with disclosure of climate-related risks. And you may have noticed that 6 weeks ago, the Securities and Exchange Commission requested comment on climate change disclosures. 6 weeks is a long time in this environment, but we've invited then Acting Chair Allison Herren Lee, now Commissioner Lee, to give us a few opening remarks to frame the discussion and tell us what the SEC is doing. Commissioner Lee, the floor is yours. Thank you very much for joining us.
Thank you. Good morning. And thank you, Professor Berner, for putting this event together. We're at a critical juncture for the national agenda on the topic of climate change risk. And so I'm very pleased to see this group of experienced academics, practitioners, and regulators coming together to focus and consider how to jumpstart our efforts on this urgent issue. I'm very encouraged by the steady stream of climate-related announcements over the past couple of months in the U.S. Indeed, it's been challenging to keep up with all the developments, but it's a challenge that I certainly welcome. And during my time as acting chair of the agency, I had the privilege of witnessing firsthand the commitment of regulators, not just across the U.S. government, but across the globe, to addressing the risks and opportunities that climate change poses to our financial system. And a lot of progress has been made in a short time, but the bulk of the work still lies ahead. And at the SEC, we've certainly been focused on climate change risk, and a key element of our efforts is the subject of this session, as you note, climate disclosure. The SEC plays a crucial role in regulating public company disclosure, and climate disclosure is fundamentally important to investors, to our markets, and to the economy. I mean, disclosure is, after all, just information or data, and we know that the data set under our present largely voluntary climate disclosure regime is at best patchy. There have been major strides in recent years in the development of voluntary climate and ESG disclosure standards, and there's a significant increase in the amount of disclosure that companies are producing, but some companies still do not disclose at all, and what is disclosed varies substantially from company to company and even from period to period for the same company, and therefore it does not provide the critically important consistency and comparability. What's more, much of sustainability reporting occurs outside of SEC filings, and that raises questions about reliability. So investors don't have the consistent, comparable, and reliable disclosure that they need to efficiently price risk and allocate capital. And issuers likewise are beset by numerous and sometimes conflicting demands for information under the various voluntary frameworks or in the form of bespoke requests from investors, raters, and others. So the current state of affairs is simply not adequate to get investors the information that they need. I know you'll hear from Professor Bilio about some of the specific current challenges in evaluating ESG performance. And while there are many factors contributing to the disparate rating outcomes that she and her co-authors identify in their paper, including varying rating methodologies and a lack of standardized ESG definitions, I believe a standardized set of disclosures in this space would help ameliorate some of those challenges in the rating space that the paper identifies. And so for all of these reasons, I have long favored regulatory involvement in this space to bring consistency, comparability, and reliability. At this point, I believe we've moved from the question of whether to the question of how does the SEC fashion a standardized climate disclosure regime to meet investor demand. And to help us answer that question, as you note, I issued a request for public comment last month, seeking disclosure on how the Commission can best regulate climate disclosure. So it's clear to me that we must move quickly to lay the groundwork for potential rulemaking for a number of reasons. The pressing nature of the risk posed by climate change, for one, the unprecedented and growing demand from investors, for another, but also importantly because of how foundationally important climate disclosure is to future regulatory efforts. We know investors need this information, yes, but all sound policymaking should be grounded in reliable data as well. And as I look at nascent climate policymaking efforts across the broader regulatory landscape, in the financial regulatory realm and beyond, I feel a particular sense of urgency with respect to our disclosure policymaking, because enhanced disclosure will yield crucial data to inform those broader regulatory efforts. So I'd like to take this opportunity to urge you all to consider submitting comment letters in response to the request for comment that was issued in March, Because to get the most effective disclosure regime, we must build on existing knowledge and expertise, and we must bring as many people to the table as possible to inform our work. So as you contemplate potential submissions to the comment file, I hope you'll help us think through some of the most challenging questions that the Commission is facing. And I just want to highlight a few of them. First, how do we fashion a disclosure framework that is sufficiently flexible and can be updated to remain relevant over time? Our understanding of what and how to best disclose climate-related information will undoubtedly evolve over time, and likely at a pace that will outstrip our deliberative rulemaking processes. And because of this, I'm increasingly convinced that there needs to be a role for a sustainability standards setter that could facilitate more comprehensive and more easily updated disclosure standards than we might be able to achieve through SEC disclosure rulemaking alone. The proposed IFRS Sustainability Standards Board, or SSB, I think represents a very promising approach toward the development of like an international baseline for sustainability reporting upon which individual jurisdictions could build. But there's also a need for a similar domestic standard setter, I believe. And if so, how would such a standard setter be funded? How would we achieve sufficient SEC oversight of such a standard setter? And how and to what extent would we promote harmonization with international standards? So these are undoubtedly challenging, but I think not intractable questions that we must work through. Second, what specific climate metrics are most material to investors? While I think there is likely an important role for a standard setter, as I mentioned, to play in ensuring a disclosure regime that can evolve over time, I think it will be equally important that the SEC in its own rules first establish a baseline set of standards of the climate data investors need now. There's a broad consensus around, I think, the TCFD framework for disclosure, and I think we should seek to leverage the important work that the TCFD has done. A principles-based approach like that framework allows flexibility that I think likely makes it a durable model. But certain prescribed metrics are essential for much needed comparability in disclosure. So I think a sort of TCFD plus approach is a promising avenue. And in terms of what makes up the plus, I think it's important that we hear from investors and other experts on what metrics and other data are material. Third, how do we approach the vast amount of capital in our private markets that is not subject to public company disclosure requirements? A standardized public company disclosure regime will go a long way toward enhancing the climate-related data that's available to market participants and regulators, but the large and growing private market represents a significant informational gap. One way, potentially, to gain insight into the private market is through disclosure of Scope 3 or indirect emissions, which would help us understand how private companies impact the value chain of reporting companies. But are there other levers that the SEC should consider to enhance climate-related transparency in the private market, or is there a need for congressional action in this space? On these and other questions, we will benefit immeasurably from public input. So I encourage you all to review the request for comment and consider weighing in. I really can think of few more important regulatory initiatives by the Commission than what we will do in the coming months to achieve better climate disclosure. We must meet investor demand for this information, and we must do so urgently, but we must proceed in the most informed and collaborative manner possible. So I hope that your discussions today yield ideas that can help inform our policy making, and thank you very much for having me today.
Thank you so much, Commissioner Lee.